You must be silent. You must say nothing. Say nothing about the present situation in this city. Say nothing about hunger. Say nothing about jobs. Say nothing about pay. But those in greener pastures, they may speak. They may raise their voices. But here in the smoke, you men and women, you must hush. I will not be silent. Never. No silence for me!
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Guys, we have a lot of systemic risk in the system right now in the marketplace. A week from tomorrow is the election. Will we know the results within 24 hours, 48 hours, or will it be drug out over a period of weeks? As you see, many newscasters, political pundits, whatnot, predicting potential unrest. All of this gets priced into the market. Lee, go ahead and throw up the Real Clear Politics election map. Throw that up. Notice the red, ladies and gentlemen. That is for Trump. If the election were held today, those are all of the states Trump would win, giving him an electoral college landslide. Most likely a red sweep. As you guys know, I predict Trump's going to win, and I think he's going to win the popular vote, something that hasn't been done since, I think, was it Reagan? Reagan might have been the last one in the 1980s. I don't think Bush won the popular vote. So keep this in mind. This is very important. Why is this important, you may ask? Brendan, I don't want to listen to politics. I don't care. You should care because it affects the marketplace. Remember what they did in September. Remember September. Feel like a little V for Vendetta. Got to throw it up for November, though. Remember what they did in September. They overinflated the jobs numbers intentionally to bring down the unemployment rate. For those of you that don't know, we were at 4.3% unemployment rate. The government hired 765,000 people in September to drop the unemployment rate to 4.1%. Again, this is all political. Zero Hedge wrote a great article breaking all of this down. Peter Schiff did a rant on it as well. Let's go ahead and roll that clip, Lee, for all the new subs.
In fact, according to Zero Hedge, but for the surge in government employment in the month of September, if you just back that out, right, and just maybe it was just a normal month, according to Zero Hedge, instead of the unemployment rate going from 4.2 to 4.1 the month before the election, it would have spiked all the way up to 4.5%. Now, that is a headline that the Harris administration does not want to run on. And so conveniently, we've had the biggest government hiring boom in history that was able to bring the official unemployment rate to 4.1.
So you have to understand why it matters who gets elected, because there's a massive rug pull coming. What will make the big dumb money sell out of their positions? The imminence of a recession. Remember, Wall Street forecasts, no recession, soft landing. The Fed, no recession, soft landing. The government, which who believes, if you believe the things the government says, you're watching the wrong channel. But the government, no recession, we're in a soft landing. If Trump wins, the question will be, when will they pull those numbers? When will they rug pull those numbers and actually have the actual numbers of the economy? So then from a political standpoint, they can blame Trump. Oh, see, Trump got elected. Now the market's crashing. See, it's all him. The market's afraid of his tariffs. And then they can have all their podcasts and their shows about how Trump's tariffs are going to destroy everything. This is how it works, guys. Understand how the system works. But this is not reality. This week, Friday, we have the non-farm payrolls coming out. Now, non-farm, the number that the street's looking for is 125K to 150K. Now, Bloomberg has minus 10K, a negative print. And of course, Citi has 90K, but the market's looking for 125 to 150K. If you get minus 10K and you get revisions to the last 2 months, which is what they do every new release, well, guess what could happen, guys? Unemployment rate can tick up. The unemployment recession indicator triggered back in July of this year under Biden and Harris. The yield curve inversion indicator triggered back in 2022 under Biden and Harris. The recession is going to happen no matter who gets elected. That's what you need to understand. You're going to get the recession either way. That's important because we have key metrics like a 33% drawdown average and a normal run of the mill recession. You need to understand these numbers. Now, let's just narrow the scope here for what's happening in the marketplace. Because right now in the marketplace, what do we have? We have the market struggling at key resistance. We have these non-farm payrolls coming out this Friday. We have the election a week from tomorrow. There's a lot of political risk. So I've made the last couple of videos telling you about the election crash cycle, an average of about a 10% pull down that starts prior to the election. We also have mega cap tech earnings, 5 of the Mag 7. Tesla already reported. NVDA is not till November 20th. The other 5 are all this week. Could be a short-term catalyst for a move up, or it could be the beginning of the decline for this retracement. If we are going to continue to track to the GFC cycle, which, as you guys know, since the spring of 2024 has been my base case, then what will happen is we'll get the retracement. Trump wins, you'll get a bounce, a rally, and you won't make a new all-time high. If you make a new all-time high, that brings our all-time high targets into perspective for the S&P specifically, 6,000 to 6,100. If you continue to track to the GFC cycle, you're making a lower high below 5930. That would be your next high, and then start to form a top for your next wave down. So we're going to go over all of this in the charts. Couple of key metrics you need to pay attention to. We're at a 3-year high of insiders selling. That's right, insiders. The market insiders are at a 3-year high of selling. Bloomberg was just talking about this. We are at a 2-year low for beat rate right now because earnings are coming out. What does that mean? For those of you that don't know the Ponzi game, the scheme that they do, the grift in the marketplace, they lower earnings expectations so you always beat. Right now, we're at a 2-year low for a beat rate on the S&P earnings for the companies reporting, but it's still 75% are beating. You know why that is? Because they lower the metrics. To put this in perspective, last year, we had a 33% expected earnings increase growth for the Mag 7. Last week, it was expected to be 11%. Now they lowered it to 8%. So when they report, they can say, Meta just beat. They got 9% growth, right? They want to report the beat. So then the retail, the really dumb money, piles into the market, buys Meta. And what is the big money going to do? It's going to sell on your ass. That's what it's going to do. You're going to get the market rallying up if they all beat. And at some point, it will hit a top. And then they're going to drop that thing down because, again, the risks we highlighted prior is why they will bring the market down, the uncertainty in the marketplace, and then you will get a rally, right? You'll get a post-election rally, and the key will be whether or not you can take out the all-time high or you fail below the all-time high. Understand also, household exposure right now to equities is at an all-time high, meaning the amount of households in the US, it's above 70% that have some type of investment in the stock market is at an all-time high. Higher than 1929, higher than 2000, an all-time high, meaning market risk is even higher. I want to show you this chart from Goldman Sachs, David Kostin. They're a chief equity strategist or chief investment officer, whatever his title is. Lee, throw this up. I'm going to narrate as that's on the screen. Goldman Sachs has talked about, this came out last week. It caused a big stir on Bloomberg, a big stir in other marketplaces. They were talking about it, writing articles about it. Goldman Sachs is saying you're pulling forward the next 10 years earnings into this bubble that we're inflating, the next 10 years. So if you look at the chart, you can see their modeling that they did with their own model. Look how accurate that tracks. I mean, that's actually kind of impressive, but they're predicting a 10-year return on the S&P of 3%. Now that's nominal. That's not adjusted for inflation. Adjusted for inflation, 1%. To put this into perspective, over the last 10 years, you've averaged 10 to 11%. Do you think the marketplace is predicting or pricing in a 90% drop in returns on the S&P? Of course they are not. Now, you could say to yourself, but Brendan, that could just be doom and gloom. It's not. It's Goldman Sachs, right? They are really, really into being bullish, getting everybody invested. But you could say this is doom and gloom, guys, but in reality, it's not. We've been over this. I made a Discord video on this as well for the members. But if you look at the historical bubbles and the crashes and the amount of time it takes to make a new all-time high, 10 years is not unreasonable at all. 1929 crash, the market did not break even. It did not break even until the early 1950s, okay? Almost 25 years. With the Nifty 50 bubble, the Dow peaked in 1969. It took 13 years until the early 1980s to make a new all-time high. You were underwater the whole time. What about .com? When the market peaked in March of 2000, the S&P did not make a new all-time high, and it was only for one day. As you guys know, October 11th, 2007. It made a new all-time high for one day and then declined another 57%. You waited 7 years. The NASDAQ took longer than that to even make a new all-time high. So if you look at it from the perspective, people say, well, when would we make a new all-time high if this was a market bubble? If it was, I mean, it's clearly a market bubble, guys. It's clearly a market bubble. But if it was a market bubble, I could tell you right now, the rest of the decade, you will not have a new all-time high. And it's going to take you time to decline to the bottom. Understand in the GFC cycle from peak to trough. So you have October 11th, 2007 to March of 2009 when you bottomed. It took you 17 months to bottom. And the .com cycle from March of 2000 to October 2002, it took you 31 months to bottom. Just an average of the two declines puts you at 23 months. So if we did make the all-time high, if the all-time high is in right now, if it's in, well, add 23 months, guys. So you're looking at 2 years roughly from now. So you'd be talking about a bottom in the market sometime September, October 2026, just based on the average. That's before you start climbing back up, okay? So I'm going to give you all these targets, all these levels on the charts today. Guys, SimpleFX has a huge tournament starting next week. I'll pin it in the YouTube comments. If you live outside the US, join that exchange. It's $100,000 in prizes. I think you'll really enjoy it. If you use our link, you also get our bonus deposit up to $5,000 instantly, no games based on your deposit, and you can trade these hyper volatile markets. I hope to see all of you on our Discord, guys. You want to join our Discord? Click the YouTube join button. There's a video there, real easy to join our Discord. You can message Lee in the Telegram, which is in the YouTube description, if you have any questions about joining. All right, guys, without further ado, Lee, let's start the show. All right, ladies and gentlemen, let's go ahead and kick off the TA. You know, one thing is, if you don't know who to vote for, you don't follow politics, how do you feel about inflation? Vote with your pocketbook, okay? Vote with your wallet. Because back when inflation started, way back over here in 2020, look where inflation was. You know, when Trump left office, it was 1.9%. Look at your embedded inflation now over here on the left. 26.28%. Every single thing you buy has embedded inflation on average of over 26%. Understand that number. Prices will not come down. Prices are inflated because we increase the money supply because Biden and Harris are responsible for 25% of all the debt the U.S. has ever created in the 250 plus year history of the country, and they did it in 3.5 years. So this is where inflation is now. And as you know, groceries are up over 30%. Look at the price of housing. Most people can't even afford houses. So consider that when you cast your vote. Let's go ahead and look forward. Looking at the Dow. When we look at the Dow, guys, this is my prediction. The S&P is going to do this move. This is a leading indicator for what the S&P is getting ready to do. Where did the Dow fall to? Its immediate support level of its Wyckoff trading range right here. Denoted there by that fractal. You're at 42,605. Can the Dow fall further? Of course. The 618 is down here at 41,389 based off of our W pattern. Okay. Now understand, if we have some type of unforeseen event, such as political unrest, a contested election that goes for weeks and weeks, then we need to go back to our area of divergence we've covered the last couple of videos, guys, which was back in April, the April low. So when we look at our first level of divergence across the indices, you get much lower targets. Your 618 would take you down to 39,800, bringing you back into these tops over here. You can see on my screen as I draw my fantastic rectangles. Okay. So be aware, 2 levels of targets, normal level retracement, or what do we have? Political unrest, election uncertainty, markets go down, maybe yields spike. I don't know. I don't know what the catalyst will be, but understand you could potentially have lower level targets as well. Now, the Dow is trying to rebound post sell-off. It's hung up at 42,679. If you just pull a fib retracement from your wave 5 to your low here, you can see the 618's up at 43,000, 786 at 43.3. So if you were to get some type of rebound before the next tip over, maybe the Mag 5, the 5 that are reporting this week, maybe they have good earnings, and just by proxy, this comes up with the S&P and NASDAQ if they were to rebound, and you make that type of pattern a double top pattern. So be aware of that, because this target hit absolutely harmonically on our W pattern. As you guys know, if you pull a fib here, let me get rid of these old fibs. If you pull a fib from wave 1 to wave 2 right here, look where you hit the 1618, 43,607. You got so close. You got to 43,581, right? Within $20, $25 on a $43,000 asset, 43,607. And so now you fell down back by the 1272. You can come back down to this next shelf. You can come deeper, guys. Pay attention to the Dow. Again, a leading indicator of what I believe the S&P is going to do. Let's zoom out on the S&P on the weekly. Throw a big pitchfork on here so you could see this, because what's interesting to note here is where exactly we hit on the pitchfork, the 618. You see that? So we hit the 618. You can see you have that key support structure from your high back in July at 57.21. Current price of the Dow, 58.70. What's the Dow going to do from a weekly perspective? It's going to do this move, and this move could go deeper as well, guys. We'll look at this on the daily. Just want you to be aware of this, because again, if you look at our first level of divergence on the chart, our first level of divergence started back here, back in February on the push up. So we look at our April high, our April low, right? You can see the divergence on the weekly momentum, weekly money flow. So we can pull this from a deeper level perspective of the April low up to your current all-time high. And when did that all-time high happen? Guys, again, a month ago, I made a video called Rally Killer. I predicted 3 pivot dates a month ago for the month of October. October 2nd, October 11th, October 17th. Remember what happened October 2nd? We made a new all-time high 2 days prior on September 30th. We've dropped 100 points and held that high for 2 weeks. What happened on October 11th? That was the anniversary all-time high from the GFC cycle. Nothing happened October 11th, but October 17th, to the exact day, a new all-time high. The market fell more than 100 points. I posted that trade on the Discord, and now we're still below that all-time high. So we're going to look at that on the daily chart. But again, when you're looking at this deeper level of retracement, where this could go with a black swan or election issues or civil unrest or whatever, then you got to look at these patterns, guys. The 0.5 fib to 50% move takes you to 5,445, 618 at 5,331. That's significant because it brings you back to these highs. You can see this buying demand zone here as well at 5,331. Again, not my base case, but you can't predict the black swan. That's the nature of a black swan, right? Base case is going to be more of this type of retracement, possibly coming back down a little bit more. We'll look at this on the daily right here after we look at this pattern. ABC pattern held up beautifully. We have the 100% move here at 58.77. You're at 58.69. You came up, made that exact all-time high on October 17th. You got a lot of supply dumped on you. And guys, when you look at this as well, this is basically a 3 drives to a top, right? So, law of 3 patterns, very key in the marketplace. Gann wrote about this over 100 years ago. Top 1, top 2, these are Wyckoff ranges. You see it? Top 3 right now. Could we come back up with some excellent earnings? Yeah, of course we could. Market euphoria, right? This is definitely not based on fundamentals. Market euphoria could drive you back up, but this looks to be a topping range, looking for that risk-off move by the big money. Once the big algo switches, the other algos will follow. You'll see selling pressure in the marketplace. So let's look at this on the daily. And again, October 17th was significant from a celestial cycle perspective because it was a supermoon. The moon was huge. I don't know if you guys saw it. You could also see 4 planets, at least in my part of the world. You could see 4 planets and a comet that wasn't around for 84,000 years. It was also a near lunar eclipse, and it also marked the exact all-time high on the exact day for the S&P. And again, you can see you're struggling here from a fib perspective of our W pattern. Here's our W, right? You can see the W pattern. The fib perspective, the 1272 at 5,884 is exactly where you're getting rejected from right now. So let's go ahead and take this off. And let's look at this from some realistic target projections here. As you can see, based off of this October 17th high, we already fell more than 100 points all the way down to, where did we get to? 5,800. So we fell 130 points. And again, I posted this trade on the Discord. We got our little reflexive rebound that's trying to come back up with all the earnings coming out this week. And where can we go to next? Well, the way that I want to look at this target projection, let me go ahead and draw this with waves so you guys can see this. I know some of you like to do this at home as well. So here's our W. Denote this for you, right? We got our W pattern. Put this up here. That for right now is our all-time high. Where could this go? Well, take your fib from wave 4 to wave 5, and I'm looking at the 50% retracement at 5,660, the 618 at 5,597. And where is our 50 moving average? Let's just look at that. There's a bunch of algos that look at that. That's right around 57.25. 618 most commonly retraced to fib. So at a minimum, guys, what I'm looking for is this move. You got the move down. Here's your reflexive move up. If you don't take out your all-time high, then I'm looking for that next wave down. That can at least come to the 50, and then I'm looking beneath that at 5,660, 5,597. And why are those numbers specific? Again, the election crash cycle, looking for an average of a 10% drawdown, a correction as the market would call it. And if you come down to the 618, guys, it's only a 5.5% drawdown. If you come down to the 50, it's 200 points from that high, but it's only a 3.5% drawdown. So again, to come down to that 10%, you start looking at those deeper numbers we looked at from the weekly time frame. There's that 53.25 number for 10%. In 2020, we did 9.5%. So you'd be looking down here at 5,400 if we were to copy the 2020 retracement, and that's 537 points. Count them. That would be awesome. Trade is in effect here. here. So we're watching this very closely on the Discord. Let's go ahead and look at the NQ. NQ, of course, completed harmonic ABC off the pandemic low. Target was 20,623. Struck it beautifully, as you can see. Where are we struggling? We're at 20,548 on a weekly time frame. No closes above 20,623. Let's do the same levels here again. Looking at two different target levels across these assets, guys. The target level based on the daily time frame for the W pattern that we formed, but also the black swan target level, political unrest, something happens, escalation in war, whatever, right? We don't know, but we're going to cover it because it's real. And so we're going to look at this, and let's go ahead and open this up. Let's look at the divergence. Again, where did the NASDAQ start diverging? Back on the July top. That's where you got your divergence in both momentum and in the money flow. But to keep it consistent, we're going to pull this from the April low. Fib retracement, April low, just like the S&P, right? Come up to your all-time high. And let's see what we got here. So if we look at this from a weekly perspective of where you could draw down to, 50% retracements, 19,000. Let's just go ahead and pull this from your all-time high. If you come down to 19,050, 9% drop, right? Again, the NASDAQ typically moves faster up, moves faster down, or higher up and lower lows than the S&P. But if you got your 9%, 19,050, guys, it's almost 2,000 points down. 2,000 points. If you come to the 618, you're looking at 2,400 points, an 11% move. So that would be my black swan. Something happens with the election. Maybe it goes for weeks. Maybe both sides start suing each other. The courts have to decide things. That could be the drama. Big risk off move. Watch those two levels. Again, 19,000, 18.6. That's the 0.5, 50% retracement, as well as the 618. When we zoom this into the daily time frame, you can see the W pattern based here. You can see the 20,623. Again, beautiful, right? Beautiful resistance. But we're going to pull our fib the same way from the wave 4 of the W all the way up to this level high, okay? Your highest high right here, your highest high. So again, short-term realistic targets, where can this go to? A 50% retracement takes you to 19,523. You're at 20,536. So basically 1,000 points lower. 618, 19,244. So understand what I'm looking at here, guys, is this move, right? You'd be looking at this type of move. Hold this, you'll get some type of after post-election rally, and that's where you start looking at the next leg up, okay, the next move up. But right now, those would be your near-term targets, the weekly time frame, giving your black swan type targets if something happens, right? So that's what I'm looking at here. Keep in mind, again, we have Meta, we have Microsoft, we have Apple, we have Amazon, we have Google, all reporting this week. So if we were to come up, take wave 3 to wave 4, if we were to come up on the NASDAQ and there is another high to come in, you can see we're above the 1272, still below 20,623, but 21,067, you can see as my termination point here for the wave 5. 21,067 would be my upside if those earnings cause some type of rally, right? Basically, you're looking at, that would be 550, 600 points up from here. If we come up to that level, you don't want to watch that for a top to form, because that could be an awesome trade with a risk off trade following by the big money in the marketplace. So look at NVIDIA, because you got to know what NVIDIA is doing. Giant W, got to our 1272, got above it. And again, where's our harmonic expansion? 1618, 149.99. You're at 140. If you get the rally from the other, the Fantastic Five, whatever you want to call them, if you get that rally, watch 149. This will drag the NASDAQ up. NVIDIA, the largest company in the world. S&P will have a rebound. We'll see how high it can go. But you'll see all this move up. If they disappoint, because earnings have come down from 33% a year ago, earnings growth, 33% a year ago to 11% last week to 8% for this week. So if the dumb money runs things up because they hear the word beat, which they always lower it so they can say the word beat, And then big money flips this around. Watch NVIDIA to come down with the other Mag 7. And if it does, you need to hold 131, right? That's right here, your Wyckoff range. It's also right here in the heart of these candles. You'd want to hold 131 so you could potentially do that type of move, okay? Maybe hold it as a base. If it's just a normal retracement, start moving up. If you cannot hold that 131, let's go ahead and pull fibs the correct way so we can look at this from a Fibonacci perspective. Take 4 all the way up to your current all-time high. Then you're looking at 122 and 117 down in this level if this was to capitulate because the other Mag 7 start to fall and sell off hard. Okay, watch those levels. So let's go ahead and look at the DAX. The DAX, that harmonic expansion target from the gigantic ABC from the pandemic low, was 20,160, right? We got so close within 500 points or so of hitting it, but the DAX broke out of its Wyckoff range. You see the Wyckoff range that formed right here, right? Beautiful. You see that range, that rectangle? We came up, made our Livermore pivot, shot to the upside, but we can't take out that fractal yet. We're trying to make a W to do this move. We could get this move if the Mag 7 or the 5 that are reporting pull the markets up. You could see the DAX do that move. Or if you zoom in and look at this from Fibonacci and from a pattern perspective, you have a left shoulder, you have a head, and this can easily be a right shoulder, okay? Just like that. So you'd be looking at a 5-wave pattern in this perspective if this was to play out in this fashion. Here's your 3, here's your 4, and this could be your 5, and then the market would come down. Where would it come to on the DAX? Just looking at from a pattern perspective, 19,000, guys. You want to hold 19,000. It's the ceiling of your Wyckoff range where you stack candles. So you'd be looking at this move to fail and come back down, head and shoulders type pattern if it plays out that way. And the other thing you can do is pull your fib from your all-time high down to that little low, and you can see you're struggling right at the 618, 19,650, just above it, 19,719 is a 786. Again, kill box range, right? You want to watch that range up in this area to see if you continue to fail there, and then look for the follow through, the rollover. There's your 50 sitting right at the ceiling. That'd be my near level targets on the DAX. Let's look at Bitcoin. Bitcoin's been moving back up, right? When I was talking about this happening down here, we gave you this prediction of where this would go down to. We gave you the top prediction, gave you the bottom prediction of where this would sell off to, the mid 40s, high 40s, and that's exactly what it did, 48,946. And you can see we've had the reversal in place since with the rally, with the rate cut rally in the markets. Bitcoin's been inching up as well. And so you can see this moving up, retesting again these highs, right? That's key to watch, is that retesting of the highs, because ultimately the pattern you want to be afraid of, again, black swan type event. Black swan, by the very definition, you cannot predict. So I can give you ideas of what a black swan would be. And again, civil unrest, election uncertainty. That, I mean, I guess you could say that's really not a black swan. It's more of a black rhino because it's something that's obvious that could happen. But you know what? Whatever. You can get into those debates with me or with somebody else in the YouTube comments. But this is the pattern you want to be well aware of if we get a black swan type event, just printing a massive double top that capitulates and falls down to lower levels, right? Now, again, not my base case. Base case is based on the pandemic ABC, just like the NASDAQ, which it tracks to with an 80 to 93% correlation. NASDAQ completed its 100% move. I think Bitcoin's going to get up there. It's 80,804. And when we pull a fib from your all-time high to that retracement low, that lines up beautifully with the 1272, 80,804. You see that right on top of each other. That's from a weekly perspective. When you look at it from a daily perspective, again, you have your channel, and I showed you this previously, but pay attention. Here's your 3-wave moves, right? Your ABCs, because if this is what you're printing, as I showed you last time, this was a 26% drop. This was a 30% drop from these ABCs. If you're doing that here, you're going to come back down and retest the bottom of the channel, and that'll once again be like a 30% drop down there in the 40s again, 49, low 50s, right in that region. Okay, that's if it was to do that. But the bullish scenario is my base case for Bitcoin. And then you can see it broke out above the trend line, my trend line. And you can see you broke out above it. You're holding it. So you need to move up from here, get that catalyst. If you roll back down, you can see we tested our fractal here, just like we predicted. We came back down, tested the fractal there at 65.8, bounced back up. You want to watch that 50, right? The 50 is right around 63.5, because if the markets do roll over, right? The markets do roll over, I would expect Bitcoin to roll over and try to hold support just like it did here on the 50. Okay, so you want to watch those moves because it's possible to make that move. You can see you're getting some supply dumped. You need to take out this fractal. It's very important to get upside 69,573, or else you're just printing, once again, another A, B, C type pattern that could fail and bring you some lower levels. So watch that closely, guys. All right, guys, I hope everybody enjoyed this video. I hope you guys check out our Discord. Again, you can click the YouTube join button. Instructions are there how to join. Message Lee with any questions and Telegram. I answer your comments as always. Please do like and subscribe. I'll see you guys on the next video. Take care, everybody.
Make a wish and roll with the